right. Welcome, everybody. Thank you all so much for joining us for today's Power Play Tuesday. I think we have a very special treat for y'all with Josh and Brandon over from Gold Leaf Farming. Going to be talking to y'all a little bit today about some of their expertise and their knowledge in the farming industry and kind of how private investments and all of that sort of works together. So just to give a brief introduction for the two of them, let's see. So Josh serves as the vice president of acquisitions over there at Gold Leaf Farming. He's going to be the first one talking with us today and kind of giving a little bit of a presentation. But his focus is on sourcing, assessing, and capitalizing farmland investment opportunities. He has experience in several previous roles in the financial industry. But Josh has actually a BA in economics from Emory University and an MBA actually from UC Berkeley Haas School of Business. As for Brandon, he is the co-founder and the head of farming at Gold Leaf Farming. He is a tree nut grower, manager, and consultant, and he's actually overseen approximately 20,000 acres of crops throughout California in his career. Previous to Gold Leaf, he was very involved in the private investing and farming industry and kind of how those two collide. So they both got a lot of experience there. Brandon attended Cal Poly San Luis, where he obtained a BS or a bachelor's in pomology and a minor in plant protection sciences. He's completed several leadership courses through this, I believe, the state of California. So both very experienced, have a lot of knowledge and understanding, obviously, in their specific practice. So before we jump into the presentation and kind of let Josh get going here, I do just want to share with y'all really quick, as always, if y'all are not familiar with Quest, you haven't really been a part of our webinars before, this is something we do always share, right? We cannot provide any sort of tax, legal, investment, or deal structuring advice. So please bear that in mind as we go through the presentation. This is purely for your education. But without further ado, I guess we'll go ahead and bring Josh up here. And one other thing I do want to say as well. We're going to have Sarah Shellum, one of our other individuals here at Quest, who's moderating the presentation. So go ahead and put your questions there in the comments, and we will get to those there at the end. We're going to have a little Q&A session with Josh and Brandon after the presentation. So let us go ahead and bring Josh up here. Josh, thanks so much for joining us today.
Hey, no, thanks for having us today. Appreciate it.
Absolutely. I'll go ahead and get myself out of here and just let you jump right into it.
Awesome. No, sounds good.
Okay.
Well, awesome. I'm not sure how many folks are on the call right now, but really appreciate you guys taking some time today to get to know us and maybe or hopefully learn a little bit about specialty farmland investing. Our goal today, I think, is really to answer 4 questions for you guys. We want to talk a little bit about specialty farmland as an asset class, why we think it's attractive. We want to talk about gold leaf farming or GLF, why we think our platform is pretty well positioned to take advantage of specialty farming. We want to talk about why now. There's an awesome timing in our market right now to invest. Prices are low and it's a great time to get in. And then last but not least, we want to talk about your questions. So what we're going to do is maybe 15-20 minutes presentation, and then we'll go to your questions. So why specialty farmland? By the way, a lot of people ask, what is specialty farmland? When we talk about specialty farmland, we're talking about farmland with specialty crops. So we are not talking about corn or soybeans or cotton or anything like that. We're talking about unique crops, often permanent crops that require a really specialized climate and conditions to flourish. To take a step back, before going into specialty farmland, I think it probably makes sense to set the stage and think about what makes a good investment or what makes a good real estate investment in general. I'd say there's probably 4 components, 4 ingredients. The first thing is macro trends, right? You've got to be on the right side of the macro trends, all about supply and demand. You can, if you're not, investing into something that has a product with limited supply and a lot of demand, it's hard to make money. The next thing would be fair pricing. You've got to invest into businesses at a good price. I don't know, maybe it was Warren Buffett who said a lot of good investments were undone by horrible prices. You've got to buy at the right price, otherwise it's not really worth it. The third thing I'd say, and this really I'd say differentiates the good from the great sponsors, is the value creation opportunity. It's good to invest into opportunities that can be enhanced. So in real estate parlance, it's good to buy a building where you can increase NOI. In private equity, it's good to invest into opportunities where you can increase EBITDA. In farmland, we think a lot about, can we create value? And we think the good value creation opportunities often aren't priced in, but help drive outsized returns to investors. And the last thing is tax efficiency. No one wants to make a great return and then give it all back to the government. So how do we stack up here? From a macro trend, it's pretty obvious, right? There's more and more people in the world eating more and more calories, demanding more and more food, and there's less and less land. You've actually got something where, in the next 10,000 years, we're going to produce, right? Excuse me, in the next 40 years, you're going to produce more food on Earth than the food that's been produced in the last 10,000 years. So there's a huge amount of food that needs to be produced, but there's less and less land. As a result, farmland is increasing in value. The next thing is fair pricing. So when we're buying these specialty farms, we're able to buy at 10, 11, 12% cap rates. This is much better, in our opinion, than other real estate out there. You're still seeing real estate at 5, 6, 7% cap rates. Those were fair and fine when treasuries were low and there was no yield in fixed income. But now when you've got a 10-year treasury close to 5%, in my opinion, it really doesn't make sense to buy real estate at a 5% cap rate, but it still makes sense to buy farmland because we're at a cap rate double the risk-free rate. In regards to value creation, we're generally buying these farms from older family farmers. These are folks who are great people, good farmers, but they haven't really invested that much into their farm. If anything, they've been thinking about selling it. So about 2/3 of farmers out there are thinking about selling their farm in the next 20 years. As a result, there's a lot of low-hanging fruit, no pun intended, but we're able to buy these farms from families and drive value substantially within the first year. And last but not least, tax. Specialty farmland qualifies for a lot of special tax programs. The most impactful is bonus depreciation. So when we buy a farm, let's say half the value is land and half the value is farmland improvement. That's trees, water, etc. All of that improvement can be bonus depreciated within the first year or first years. So that drives a big passive loss to investor, which makes it a pretty tax efficient asset class. If you look back, specialty crops have been a pretty good place to place your money. So gold leaf, we do a lot in almonds and pistachios. If you look back in the last 20 years, almonds and pistachios have averaged 20% returns per year, double the stock market. So when we think about this, we look back and think about all the returns that the farmers have gotten. It's kind of not a surprise when you think about the macro characteristics we just talked about and the investment characteristics. We're happy to see that these characteristics have resulted in a 20% average return over 20 years for almond pistachio growers. But something pretty interesting about our market is that it's still pretty much mom and pop. If you look at specialty farmland, it's about $1 trillion asset class in the US. It's only 2% owned by investors. That's much different than, let's say, multifamily or office. Those are about $4 trillion asset classes, also big, but they're very institutionalized already. As you guys know, there's tons of ways for investors to get access to multifamily or office. There's not such an easy way for investors like you guys to get access to specialty farmland. And that's really the problem we're trying to solve at Goldleaf, is we saw these excellent returns in the past, but saw that it was hard for investors to get access to this asset class. So we wanted to create a best-in-class platform that gives investors the chance to invest into specialty agriculture and make returns. We were, I guess, 7, 8 years ago, just a couple guys. We've since grown. We've now got about, 26 farms under management, worth about 350 or 400 million. Our headquarters are in Modesto, California, but we've got offices throughout the state of California and Arizona. We've got about 12,000 acres under management. So for reference, that's about 12 times the size of Golden Gate Park. And we generally have a hub and spoke model, meaning we find a good area to buy a farm in, and then we grow in that area. As we grow in that area, we can take advantage of economies of scale. When you think about what's different between what we do and maybe what others do, there's probably 3 main things. The first is a extreme focus on supply constrained crops. We only buy crops. We only buy crops with excellent macro tailwinds and supply constraints. The second thing is we do all of our operations in-house. We don't lease to third parties. We don't use custom farmers or anything like that. We do everything ourselves. All the farming is done by our team. Brandon, who will join in a bit, our co-founder, can talk a bit about our farming strategy. But by farming our farms ourselves, we can drive value, and we can use ag tech and really use plant science to increase plant yield and also cash flow. And last but not least, we get a lot of questions about water. We are really intense about water diligence. We buy really senior water rights in California. And as a result of that, we're pretty excited about building this portfolio of senior water rights, because if water becomes more and more scarce in California, the value of water rights will become higher and higher. So we're really water focused, and we see that as a good opportunity, an area for growth, not so much a risk for our business. Here's our leadership team. In short, I'd say we've got a good mix of farmers and finance people. Jack, who founded us along with Brandon about 7 years ago, he's an investor by trade. Brandon's a farmer. They got together and realized that the magic happens when you've got part investor, part farmer. And that's what you need in this business. My background's more in private equity, and a few other folks here have a mix of backgrounds. More importantly, we've got about 80 total employees, a lot of really good folks, ranging from farming to agronomy to water to finance, and that's what really makes the day at the end. Is you got to have really good people farming your farms, and if you can do that, then you're in a pretty good shape. What's our strategy? I'd say, like any investment company, you've got to buy right, and then you've got to add value. How do we buy right? So what we've done, actually, it was a pretty painful exercise, to be honest with you, but what we've done is actually mapped all almond and pistachio farms throughout the state of California. This is our internal GIS map that you see here on the screen. And what we've done is actually targeted the areas that are the best places to buy. These are places with the best weather, the best water rights, etc. So what we've done is we basically targeted about 250 different areas and laser focused on essentially the premium areas to invest in the state. Once we find a deal, then we add value by farming ourselves. As I mentioned, we're able to increasingly buy deals at better cap rates. So the last 2 deals we've done have actually been at close to 13. The last one was about 13% cap rate. We're pretty excited by this because we're finding really good deals with the tools that I mentioned before, but we're finding that prices are coming down as interest rates come up, which is a good thing. It's very easy to talk about how our operations, create value. I'd say that's anyone talks about value creation. It's very hard to actually do that in real life. And you guys can ask Brandon later on today about how he actually does that. But one example that I wanted to provide for you is around organic transition. So organic almonds trade for twice the price as conventional almonds. You might have noticed that, yourself at a local supermarket. But to convert to organic, it takes a 3-year process. It's really hard to do. And most farmers just don't know how to do it, and they don't have the capital to do it. So as a result, there's a big opportunity for us. If we can buy a conventional farm and then transition it to organic, we can capture much higher pricing and much higher cash flow. So this was an example of a farm called GLF3 in Sacramento. It's actually about 5 minutes away from Sacramento Airport if you're in the area. We bought it 3 years ago, and we did a 3-year organic transition. And by doing that, we were able to take the cash flow from about 4% per acre, it was relatively low, to about 30% now. 4% as a percentage of equity. And that was something like $400 or $500 an acre. Now it's about $3,500 an acre. So by transitioning from conventional to organic, allowed us to capture not 175 pricing, but 375 pricing, and drives a ton of value to our, for our investors, really. What are we doing now? Historically, we raised on a deal by deal basis. So we found a farm, we would raise $5 to $10 million of equity from friends and family and institutions, pull it all together, and then buy a farm. In the last year, we've moved from that farm by farm model to a fund model. So now we've got a fund called Goldly Farming LP. This is an investable product. We're taking investments for it right now, actually, and it's a pretty good product for both regular dollars and IRA 401k dollars. But what this fund owns is 16 different farms right now, and as we buy more farms, we'll put it into this fund. So if you were to write a check, you would get exposure to these 16 farms and then additional farms as we acquire them. How it works is this is really a cash flow driven strategy. So we buy the farm, we farm the crop, and then we sell the crop at the end of the year. When we make money from the crop sales, that cash is then distributed to investors. So to think about it, it's similar like when a real estate private equity firm buys an apartment and collects rent from the people in the apartment and then distributes the excess rent as a distribution to the investors. That's exactly what we're doing here. We're selling our crop and distributing the excess profit to our investors. We think on average we'll be close to high teens IRR, and that'll be driven by high teens distributions. So, you're going to be getting 15% plus cash distributions per year, assuming average commodity price. How we think about liquidity is we will probably hold this portfolio for 7 to 10 years and then do an exit. So we'll either sell part of the portfolio, we'll do a debt recap, we'll do a sale leaseback. After 7 to 10 years, we'll create a liquidity option for our investors. What Brandon did at his previous firm was actually sell a large portfolio to a Canadian pension, and that's something that we might be able to do here as well. So hopefully you're still with me. I haven't over-talked, but the big question is why now? You guys as investors have a lot of interesting asset classes to invest in. That's one question, but the other question is obviously what is the timing like? I would wager to say that timing is probably just as important as asset class selection, but certainly not less important. Reason number one is correlation, right? So if you think about the value of farmland, it does well generally when the crop is, when a profitable crop is sold. When it does well, it has nothing to do with the stock market, nothing to do with other equity markets. And as a result, there's negative correlation between the stock market and farmland. So if you're looking for a hedge against the stock market, this might be a good place to invest capital. At the same time, there's a positive correlation with inflation. So, if you're looking for some protection if inflation heats up again, but might give you some protection in case the stock market, decreases in value, this is probably a good place to play. Another reason is really a micro reason in regards to our market. So we play a lot in almonds. Almonds are a commodity like anything else, and the price sometimes goes up and sometimes goes down. Right now, we're in a low period, a down period. This is pretty interesting for new investors because new investors can get in at a good price. And essentially what we can do as a fund is buy a lot of really good farms for cheap that people are selling. These are farms that people would never sell if the price was high. So one way to think about it maybe is like real estate, right? When the real estate market is doing really, really well, no one's going to sell their real estate assets. But when the real estate is not doing well, that's when people start selling their quality assets. As a result, buying at low periods like in 2009, 2010 is a much better time to buy real estate than in really high periods like 2021 or 22. If you look back at historical almond performance, you'll see that almonds have actually performed better for investors that have invested during down periods. So in 2003, we had another low period. Over the next 20 years, investors did about 20% return. If investors had waited until 2005 or 2006, when price was higher, they would have only done about a 15% return. So we're pretty excited to have a fund now and have capital to go out and kind of aggressively pursue these maybe somewhat distressed deals that are only sold when prices are low and people lose their confidence. It's an excellent time to be buying rather than selling in the almond market. So, last thing here is we are currently taking commitments for Gold Leaf Farming LP. Like I mentioned, we're looking for high teens IRR. There's a lot of different ways you can invest, through an IRA or 401k with Quest is great. We also take non-retirement dollars. Quest has done a great job in the past with us. And yeah, it's pretty straightforward here. We're capitalizing on pretty good price window and buying assets for cash flow that have a pretty good margin of safety. So, with that, I'm sure there's a lot of questions, and I'll turn it back over to the Quest team and start our Q&A.
Yeah, perfect. Thank you so much, Josh. That was really informative. So we do have some questions here. Before we get to that, though, I'm gonna go ahead and transition a little bit into just some information on Arnd as well, and then we'll get right into some questions. So for those of you that are maybe interested in something like this, you're curious how to use your retirement funds wherever you've got it, whether it's in a 401k, a 403b, other IRAs, TSP, TRS, 503, right? There's all different kinds of plans that you can utilize to fund a self-directed IRA and invest into more alternative and non-traditional assets, such as with Gold Leaf. So if y'all are interested in something like that, I would certainly recommend that you reach out to us. This is actually an offer that we have for the entire month of November, where if you do open an account, we'll actually cover basically the first investment that you do. We typically charge $125 for that transaction. So that's something that we're offering the entire month. We also do have a QR code here that you can scan, and this will bring you directly to a link where you can schedule a consultation with an IRA specialist, somebody like myself or one of my other colleagues. That way we can look at your particular situation, determine what the best course of action is, how this would be a good fit, discuss your retirement goals and all of that. So I certainly encourage y'all to either scan that QR code, check out our website, something to take the next steps. And then also a couple of events that we have coming up. So the first one is what we're calling the rental continuum. If y'all are local to Texas, maybe you're near an office, whether it's Houston, Austin, or Dallas. This is an in-person, well, it's not just in person, but we are offering it in person. We do these events quarterly, what we call our socials or self-directed IRA socials. For this quarter, we are basically going to be focusing on short-term, mid-term, and long-term rentals. And we're going to have a panel discussing each one of those, the advantages, disadvantages, what works and what doesn't with those kind of investments. We'll also be serving food and drinks and offering plenty of networking opportunities for individuals here in attendance. Houston and Dallas will also be offered online if y'all are not near an office or can't make it out. So y'all can certainly check out our website or scan that QR code to look more into that. I believe Sarah also shared some information there in the chat. But yeah, I would encourage y'all to check these out. For Houston, actually, is going to be tonight. We've got, I want to say, over 200 people registered. So we're hoping for a really good turnout. Would certainly encourage y'all to check it out, especially if y'all have not been to a Quest event before, in person specifically. Austin will be on Thursday, and then Dallas is going to follow up on Tuesday of next week. So go ahead and check those out on our website. And then the last one here is another really, really big event that we are offering, QuestCon Live. This is actually, I'm super excited about this because for the first time in our history, we are hosting a full day event that is completely not only moderated and hosted, but also all of the panels, the experts, and the people that are going to be online are all women. So this is the first time we've done something like this. We're really excited to bring that to the industry and get the chance for y'all to hear from some of the female experts in real estate and in alternative investing in general. So this is one that I would really, really encourage y'all to sign up for. Even if you're not sure if you're going to be able to make it the whole day, these signups really, really do help us to put on more events like this. So go ahead, scan that QR code. It's completely free to register. It'll be I believe not this Friday, but the following. 9 a.m. to 4 p.m. We'll have all different kinds of segments, different panels, presentations from speakers and things like that. So Sarah just shared that link there too, where you can register directly. And like I said, registering, even just if you're not sure if you're going to be able to make it or not, really does help us to put on more events like this. So it's a huge help, guys, and we really appreciate it. But I want to say that's oh no, the last one here. This is another event that we have coming up next year in June. This is really one of the biggest events that we put on, not even every year, because the last expo that we had was back in 2022. But it is a full weekend long conference about all things alternative investing, whether it is in short-term notes, whether it's in single family or multifamily real estate, oil and gas, right? Farming, all different sorts of things. So, we are bringing in experts from all around the country. It's going to be in Irving, Texas, June 27th through 29th of the upcoming year. We still currently have early bird pricing for tickets, but I would really encourage y'all to look into the VIP tickets as well, because there is a whole lot of value there. Y'all can look on the website for more information. You can also go, I believe it's to questexpo.com, and there's a lot of information there as well. Yeah, Sarah just shared that. Questexpo.com. Check it out. I think y'all will be pleasantly surprised at the the amount and the experience and knowledge across the industry that's going to be here at this event. Plenty of vendors and other individuals and investors that you can network it with. Regardless of what your needs or your interests are, I would certainly say that this is something that could benefit you. So check it out. But that is officially all that I have. And so now we'll go into a little bit of Q&A. And Josh, I guess I can bring Brandon up here now, huh?
Yep, sure. Sounds good.
Okay, let's do it. Hey, Brandon, thanks so much for joining us today. Glad to have you here with us.
Yeah, thanks for having me.
Yeah, okay. So let's go. This is actually, it looks like a question that y'all did answer, but maybe just to speak to it again for those that, maybe missed it. This question from Geraldine is, are investment return dependent on successful and profitable harvests? If the harvest is not profitable, how does that impact our return?
Yes and no. So yes, there needs to be a successful harvest, and there is exposure to the price at which the crop is sold. But that being said, in this business, we've never had a year, or I guess very rarely would you have a year where there isn't a successful harvest. And if the harvest doesn't work, we always buy crop insurance from the government. So if we have a frost event, we actually get paid by insurance, the proceeds that we would have gotten. So the answer is yes, it does depend on it. It's not a high risk. And if it doesn't do well, we're mitigated by insurance, which is a great thing. And then the other thing is, for whatever reason, the crop doesn't do that well, or the harvest, you still own the land generally. And land is going to continue to appreciate and continue to increase in value, and the water rights. So even if there's not a good harvest, your investment would still appreciate, most likely, because the land will appreciate. Farmland, the land itself, has done something like 6% a year since the 1950s. So
awesome. And the fact that you just mentioned water rights segues us great into this next question from Bill. Can you explain or talk into more detail about water rights? His understanding is that the almond farmers are being squeezed due to their need for a larger volume of water than other crops.
Yeah, good question. And Brandon's actually on the almond board, so I'll let him answer that second question. But how the how the water rights work is, there's two types of water in California. There's surface water and there's groundwater. Surface water is water that comes through the canal systems and rivers and is generally stored in reservoirs and then delivered to the end user. Groundwater is well water, so people have wells and then they pump it. Whenever we look at a farm, there has to be two good sources of water: good surface water and good groundwater. The reason why is because if there's a dry year, then you have to rely on your well water, your groundwater, because there might be less surface water. In a really wet year like this past year, we actually hardly used any of our wells because we got all of our water from the surface water system. So to answer your question, are almond growers being squeezed? I would say yes, but only the ones that only have one source of water. If they do proper water diligence, they aren't being squeezed. And actually, this year we had excess water. We actually sold and banked 2,000 or 3,000 acre feet of water in our portfolio. So, Brandon, what would you say from the almond industry perspective?
Yeah, I'll dig in on that. And then one, broader statement I would say is there's over 100 water districts in California, and it looks like a patchwork, sort of like a checkerboard of good, bad, good, bad. For instance, we have almond orchards that are in good water districts. When you cross the road, you're in a bad water district. So these arbitrary sort of boundaries, and we intentionally, part of our diligence process, we want to invest in the good water districts. So we're in a good spot. We ultimately view, water regulation as a good thing, surprisingly, because it increases the land value for those of us who've invested in good water supply. And then it will start to shrink the footprint of almonds in California, where people are not in good water districts, less supply, price goes up. Specifically on almonds, unfortunately, there was a really a bad headline that came out in 2015-16 in the New York Times saying that almonds use an abundance of water. Unfortunately, not backed with really credible science. That being said, there is a fair argument that almonds use water. The real reason, though, it's a multiple issue. So the largest crop in California is almonds, 1.6 million acres. So anything that covers that many acres times whatever water use is going to be the biggest user of water in the state on a crop basis. But when you really get into the details, of all the plant proteins, almonds are probably almonds and pistachios are like the most efficient. The metric we use is crop per drop, calories per drop, nutrient density per drop. And as part of our sustainability modules, we're continuing to track all this. And the last thing I would say is all food uses water. Almonds and pistachios, fortunately, happen to be the more efficient ones. When you compare things like rice, alfalfa, it's almost 2x in some cases. And another like random thing that people don't think about, but like semiconductors use a ton of water. A pair of blue jeans uses a ton of water, and this data is all accessible. So I guess what I'm trying to say is it's a relative term, and I certainly feel good about the water we're using to grow a stable protein and a healthy food source.
Absolutely. Okay. Next question. Regarding the investments, do y'all have minimums or what does that look like for your investors?
Yeah, we don't really have a hard minimum. Generally, we talk about like 50K minimum, but if folks want to reach out to us and discuss, every situation is different and we can be flexible there.
Yeah, absolutely. Perfect. Okay. What is the breakdown between, it's supposed to say crops in the fund, almonds versus pistachios, so on?
Yep. So the main fund we have is about 5,500 acres. It's about, I'd say 1,200 acres or 1,300 acres pistachios and the rest almonds. So it's a little bit almond heavier.
Okay, well, I think you just answered that question, Josh. But to piggyback on Greg's question, are there other crops? It sounds like it's
we've got a leasehold of a wine grape farm near Modesto, which we own, but we don't operate. Someone else operates. And then we also own a medjool date farm, which is kind of interesting, near Yuma, Arizona, which is not currently in the fund, but maybe in the future. I think our goal will be to get to maybe 4 to 5 crops. Like I mentioned, we want to be really careful on which crops we get into. We want to only pick crops that have good unit economics. But I would think now it's more or less just 2 big ones. We'll probably get to 4 to 5 in the next 3 or 4 years. Others that we've looked at have been citrus, olives, avocados, other types of nuts like hazelnuts. But so far, to be honest, we haven't found any that have been as attractive from a supply constraint perspective as the 2 we've got. But we're looking.
Awesome. One other question from Greg here about the biggest risk. What would that be? Water, disease, pests?
Screwing up water diligence, probably. I think water, you can get around the risk if you do really good diligence and know where you're buying. But if you rush the diligence and you buy in a district that's not good or an area that doesn't have good groundwater, that's a big risk. The disease and the pests, fortunately, we have like really good farmers who can take care of it. And if there's a bad year, like I mentioned, you could be mitigated by crop insurance. So we can insure about 80% of our crop. So if we ever have a bad year with frost or something else, bad pest pressure, we'll be more or less protected. But I'd say water probably as a big risk.
Brandon, anything to add there?
Yeah, I think, disease and pests are all very addressable. There's good tools in the toolbox to mitigate those particular issues. And then, just weather in general, whether it's a farming business and we can't control weather, but to Josh's point, it's part of the game and we have crop insurance to mitigate the downside.
Got it. I can address this one for you, Greg. Both of the answers to this question are yes. You can absolutely bring your wife to the expo, but yes, she does need her own ticket. Another question here. From my buddy Jay Paul. Does this provide yearly distributions and depreciation to cover income, if any, or what does that investment structure kind of look like with y'all?
Yeah, so it's annual K1, and the K1 will often have a lot of depreciation in it because whenever we buy a new farm, we depreciate the improvements, which is then sent out to the investors. And we do semi-annual distributions. So generally how it works is when we sell our crop, we're actually just finishing harvest like this week. We will sell our crop and we'll get the first payment for say half of our crop in December and the second payment later in the year, maybe in May or June. So that's how our distributions generally work is we'll do one distribution in December, January, and then one in May or June once we collect from the person who buys our crop.
Perfect. Can the state of California limit your well water usage?
Yes, they can, but they only can do it in areas where there's critical overdraft of groundwater, where the aquifer is not in balance. So if you can tell whether the aquifer is in balance, you do hydrology tests. And there's a lot of data showing, well tests and where the water is over the last 40 years. And in certain areas, that's dropping. In those areas, the state can limit your water usage. But in other areas, it's relatively flat. So when we buy a farm, we always want to buy in a place that's relatively flat because in that case, the state of California can't limit our well water usage. And that's a little bit to like Brandon's point. Water is very interesting in California. You can't say that there's like a one size fits all approach because there's people with excess water, with awesome surface water, awesome groundwater, selling their water rights. They have too much, they don't know what to do with it. And then there's others that really don't. And if you buy in the right places, you can mitigate those issues. But good question.
Great. I believe that is all the questions we have. I'm scrolling through to make sure I didn't miss any. One other thing I want to say too, and I guess while I'm doing this, if y'all have any more questions, go ahead and put them there in the chat. There's a few more coming through already. One other thing I wanted to say on the expo, I'm sharing my email here for everyone. If y'all send me an email and y'all are interested in purchasing tickets, I can actually send you a link for discounted ticket prices. So go ahead and just reach out and I'm happy to share that with whoever. But another question that came in from Julian. You mentioned transitioning to organic farming practices. Do you also transition into regenerative farming practices, or is that not as relevant when only farming nuts?
Yeah, I can take that. So we certainly are actively transitioning to organic. We have farms that are already certified. They've made it through the 3-year transition process. And we're also exploring regenerative. Turns out once you are organic, it's pretty easy to also adapt and adopt regenerative ag practices. I guess the difference is like just from a business perspective, there certainly is a healthy premium for conventional to organic pricing, like an 80% premium. It's pretty significant. As it sits now, regenerative isn't really totally acknowledged in the marketplace as a premium. So we certainly want to be ready for it because we think it will come. Right now it doesn't exist, but we're still going to be certified and we're working on those initiatives. The nice thing about organic or any of these sustainability initiatives that lead to organic is it's truly a win-win. I think in some industries, if you want to be sustainable, or anything of that nature, there's some sort of economic trade-off. But for us, it's better for the environment, and it's a better business decision.
Awesome. And this is a good question from Joe. For anyone that joined in late, or they missed a part of the presentation, or an answer to a question they were interested in, we will have this uploaded to our YouTube channel, the recording, probably within the next 5 to 10 minutes. It's fairly quick. So y'all can go just look up on YouTube Quest Trust Company, and under the live video section, y'all will find it there pretty easily. And Sarah just shared that link there as well to our YouTube channel, and she she put it up, and I keep taking it back down. Okay, there we go. Y'all can find that link there to watch the recording, as well as any of our other videos. Right, we put up all of our other recordings there too for other education. But I think the last thing, Josh and Brandon, that I want to ask y'all, what is the best way for them to contact or reach out to y'all? Is it through the website? Do y'all want to share a phone number or an email address? What does that look like?
Yeah, perfect. So email is probably the best. You can email us. It's josh@goldleaf.ag or brandon@goldleaf.ag. We also, have some, interface on our website too. So if going to goldleaf.ag is easier, that works too. But I know it was a lot of material and probably a lot thrown at you. So we expect some more follow-up questions, and would be happy to take any time to talk to people if they're, interested in investing and learning more.
Awesome. So Josh or Brandon at goldleaf.ag. And we've got that there in the comments for y'all as well. So I think, just look one last time here. I think that's all the questions we've got. But like Josh said, any follow-up questions y'all have, reach out to myself, reach out to the two of them, and we're happy to help any way that we can. Any closing remarks, gentlemen?
Thanks for your time. Appreciate it.
Yeah. All right. Well, thanks everybody, and enjoy your Tuesday. Get out to the polls and vote if you're into that kind of thing, and we'll see you next time.
Well, thanks.
Bye-bye.